Welcome to the deep dive. Today, we're really getting into a sector that's just buzzing right now, rare earth elements. I mean, the performance lately, it's been something else. You look at Metallium, up what, 134%? Victory metals, 85%? Pretty staggering returns.
Yeah, and even the broader ETF, or AMX, seen solid gains like 26% this quarter. It's definitely caught people's attention.
Right. But what's really driving this, you think? Is it just market excitement?
Well, I think it's more fundamental this time. It seems directly linked to a very deliberate geopolitical shift.
Okay.
Specifically, the Pentagon declaring it's, finally going to break what they call China's rare earth stranglehold.
That phrase again. We've heard talk like that before, though.
True, but this feels different. Unlike past attempts, this comes with a tangible long-term financial plan, a real strategic blueprint.
And that blueprint, that was the big announcement, right? July 10th, 2025.
Exactly. The Pentagon putting $400 million equity into MP Materials.
Equity, not just a grant or a loan guarantee.
Right. It's a foundational move. They're aiming to build America's first fully integrated mine-to-magnet supply chain.
So investors are finally thinking, okay, this time they're serious. Western governments actually mean it about ending this dependence on Chinese processing.
It certainly seems that way.
But what specifically makes this different? Why is it convincing investors now?
That's the key question, isn't it?
Yeah.
Look, in the past, these discussions, they often lacked, serious long-term government money or a clear strategy.
Okay.
This MP Materials investment, though, it's a direct equity stake plus guaranteed purchase agreements, offtake agreements.
Ah, the offtake. That's crucial.
It signals a commitment that puts national security maybe above short-term market prices. It's not just a handout, it's structural. They're trying to reshape the entire supply chain, make the West genuinely less vulnerable.
Okay, so this deep dive then, it's all about understanding that pivot, how China's weaponization, as some sources call it, of these minerals is actually creating opportunities.
Paradoxically, yes. Opportunities for a new wave of companies.
Right. So we'll look at the strategy, the impact of China's recent export restrictions.
Definitely.
And highlight some companies that are jumping on this, from new tech like Flash Joule Heating to big deposits down in Australia.
That's good.
Our mission really is to pull out the key nuggets from the sources you've shared, help you make sense of this really pivotal global shift.
And to grasp that shift, you really need to look back a bit. December 3rd, 2024, that's when China banned exports of gallium, germanium, and antimony to the U.S.
That was retaliation for the semiconductor sanctions, wasn't it?
Directly. But the bigger move, the one that really hammered home the vulnerability, that was April 4th, 2025.
What happened then?
Beijing slapped export restrictions on 7 critical rare earths. We're talking samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and yttrium. The heavy hitters, essentially.
You mentioned how critical these are, just how vital are elements like dysprosium and terbium. Is it fair to say they're the backbone of Western military tech, or is that maybe overstating it?
No, I don't think that's an overstatement at all. These aren't just some obscure metals on the periodic table.
Right.
They really are foundational for modern military hardware. Dysprosium and terbium, absolutely essential for the high-performance magnets that can handle high temperatures.
Where are those used?
Think F-35 fighter jets, sophisticated missile guidance systems, yttrium, that's in thermal barrier coatings, keeping jet engines from, melting. Gadolinium's vital for advanced radar, secure communications.
Wow.
So China's message was pretty blunt. You restrict our chips, we restrict the metals that power your most advanced weapons.
It's quite a strategic chess game. Makes you wonder what other long-term plans are in play.
Indeed.
So how did China build up this dominant position in the first place? It wasn't overnight, presumably?
Definitely not accidental. It was a meticulously planned industrial strategy, really, for 3 decades.
3 decades?
Yeah. Back in the 90s, remember, Western countries were tightening environmental rules. Processing rare earths is not the cleanest business. So Western companies largely got out.
Because it was too expensive to comply.
Exactly. Meanwhile, China moved in decisively. Beijing poured subsidies into building massive processing plants. By the 2000s, they controlled over 70% of the mining and an incredible 90% of the processing. Not because they had all the ore, but because they invested strategically in that difficult separation technology, turning the raw rock into usable high-purity metals.
So Deng Xiaoping's famous line from '92, the Middle East has oil, China has rare earths. That wasn't just talk, it was basically their roadmap.
It certainly looks like it was foundational, yes. They built the whole ecosystem, mine to magnet, while the West became, frankly, completely dependent on their processing.
Which brings us back full circle to the Pentagon's move. That July 10th investment in MP Materials, it really feels like America's most aggressive step so far to rebuild its own capabilities.
It does. $400 million equity stake, making the DoD MP's largest shareholder. Plus, there's another $150 million loan specifically for heavy rare earth separation tech at Mountain Pass in California.
And it's more than just the money, isn't it? There's that supply guarantee you mentioned.
Absolutely. The Pentagon commits to buying 100% of the magnet output from MP's new facility, the 10X facility, for 10 full years, starting in 2028.
10 years. That's serious long-term commitment.
And look at the price floor. They included a $110 per kilogram floor for NdPr neodymium praseodymium materials.
NdPr, right, the key stuff for high-strength magnets. How does that compare to market prices?
Well, current Chinese prices have been way lower, sometimes below $60 a kilo. So $110 is a substantial premium, effectively a subsidy.
So what does that price floor really signal?
It signals complete de-risking for MP Materials. It says, we need this domestically, almost regardless of global price swings, for national security. It guarantees the economics for them.
Okay, it makes it bankable. It shows this is seen as an essential national asset, not just another commercial mine.
Precisely. It provides that stability needed for the long haul, for building up capacity.
And the market certainly noticed. That VanEck ETF, RMX, up 26%. It feels like institutions are finally buying into this idea that rare earth security is national security now.
Yes, and global defense spending reflects that. The U.S. alone, over $430 million committed since 2020 just to rebuild these domestic supply chains.
Yeah.
It's a fundamental shift.
A fundamental shift. Okay, let's pivot to some of the companies making waves in this new landscape.
Right.
Ranked fourth in recent performance is Green Critical Minerals, GCM, up over 80% quarterly.
Interesting. Their main game is graphite, right?
It is, but their North Barkley project up in the Northern Territory. They've confirmed a pretty long 160-kilometer rare earth trend there.
Okay.
Soil samples suggest potential for shallow ionic clay deposits. Contains neodymium, scandium, other strategic stuff that lines up with those Chinese export restrictions.
So what's the angle there? Why is their diversified approach interesting now?
Well, it potentially gives them multiple ways to win from this Western supply chain reshuffle. They're not a one-trick pony.
Right. So they can maybe pivot or scale different parts of their portfolio depending on where the demand or the government funding goes. More robust exposure, maybe.
Could be. Okay, third place, Victory Metals, VMT, up 85, almost 86%. They're really being touted as Australia's most promising heavy rare earth developer.
Ah, the heavies. That's key.
Their North Stanmore project, it's now confirmed as Australia's largest heavy REE ionic clay resource. What's really significant about that one?
Well, the composition is fascinating. That 247.5 million ton resource, it's got exceptional levels of the exact elements China put restrictions on.
Like dysprosium and terbium.
Dysprosium, terbium, gadolinium, yttrium. These make up something like 38% of their total rare earths. That's incredibly high and incredibly strategic. It's almost a direct answer to the supply challenge China created.
Wow, okay. And they had a scoping study back in March 25.
Yes, showing really good metallurgical results. Recovery's around 94% for the magnet oxides, using pretty simple leaching methods, apparently.
Simple is good in mining.
Very good. And to top it off, they got a letter of interest from the U.S. Export-Import Bank, EXIM, up to $190 million in potential financing.
Okay, so that puts North Stanmore firmly on the map as a potential Western alternative for those critical heavy REEs.
Definitely one to watch.
All right, moving to second place, Lynas Rare Earths, LYC. Their quarterly return was lower, about 28-29%, but Lynas is different. They're the established player, right? The most advanced operation outside China.
Absolutely. And they hit a huge milestone in June 2025. They became the first producer of separated dysprosium and terbium outside China.
At their Malaysian plant.
At their Malaysian facility, yeah. Officially breaking Beijing's monopoly on processing those specific heavy elements. That is a really big deal.
It really is. And their financials. They reported 25% revenue growth quarterly.
Driven by higher prices and record production. Over 2,000 tons of NdPr oxide in Q2 25. Plus, their big Kalgoorlie processing facility in Australia opened in late 2024.
Bringing separation back to Australian soil?
Right. And they've had significant U.S. DoD funding, too, nearly $300 million, supporting their expansion of processing in America as well. So Lynas is right at the heart of these Western efforts.
Okay. And now, the top performer. Metallium Limited, MTM, a truly staggering 133, almost 134% quarterly gain.
Yeah, Metallium represents something potentially revolutionary, a different approach to processing that could seriously disrupt China's tech dominance there.
Right, their patented Flash Joule Heating technology. Can you break that down? Why is it such a potential game changer?
Okay, so the game changer aspect is that it essentially bypasses the really complex multi-stage chemical separation that China mastered.
The stuff that's environmentally tricky and expensive.
Yeah, exactly. MTM's tech, which they license exclusively from Rice University, allows for single-step extraction.
Single step.
Single step.
Yeah.
Extracting critical metals, REEs, gallium, germanium, directly from e-waste or mineral concentrates. No traditional smelting, no corrosive acids needed.
How does it work?
It uses a very short, intense pulse of electricity. Heats the material to maybe 2,000, even 3,000 degrees Celsius in just seconds.
Wow.
That intense, rapid heat basically liberates the target metals.
Yeah.
So that huge quarterly jump. It reflects the market waking up to the idea that MTM's tech could solve a massive bottleneck for the West. Efficient, cleaner processing capability.
And they've made some strategic moves recently, too.
Yeah, that's really put them on the map.
Yeah.
May 2025, they partnered with Indium Corporation, the goal. Recovering gallium, germanium, indium for manufacturing scrap.
The very materials China restricted export of back in December 24?
Precisely. And MTM's U.S. subsidiary, Flash Metals USA, they're developing a modular pilot plant in Texas. 1 ton per day capacity.
Okay.
The potential is huge. A single facility like that might eventually meet most of America's gallium needs just processing scrap.
That's incredible. They also changed their name, right, to Metallium.
Yes. June 2025. Coincided with a $50 million institutional placement, fully funded their shift to being a U.S.-focused industrial tech platform.
And the tech isn't just for one thing. It's feedstock agnostic.
That's another key advantage. It means they can potentially switch between processing lithium battery scrap, e-waste for rare earths, or other strategic metals, depending on market needs. They're also talking to the DoD and DOE about grants, brought on a defense advisor.
Gregory Bowman.
Right. The potential market size is enormous, over $70 billion annually across these critical minerals. So MTM offers this kind of leverage bet on America's whole critical minerals push.
And the modular design is important too, right? For security.
Definitely. Small distributed processing units are inherently less vulnerable than one giant centralized plant. It really fits that strategic minerals recovery model.
Okay, so that brings us to the wider context here, this heavy rare earth supply crisis. China's restrictions zeroed in on these elements. Why are they so critical and constrained?
Well, we touched on it. Dysprosium and terbium, they're essential additives. They allow permanent magnets to work at high temperatures without losing their magnetism.
Which is crucial.
Electric vehicle motors, wind turbine generators. Gadolinium is key for MRI contrast agents, nuclear reactor shielding. Yttrium allows jet engine components to withstand extreme heat.
And China's dominance here was almost total.
Until very recently, yes. In 2023, China still processed something like 99% of the world's heavy rare earths. That gave Beijing immense leverage.
And we saw the impact pretty quickly after those April restrictions, didn't we?
We did. Reports of a 75% drop in U.S. magnet imports. Production slowdowns at Ford's Chicago plant. Issues for European auto suppliers.
A stark reminder. A bottleneck in one small component area can ripple through major industries.
Absolutely, which is why Australia suddenly looks so important in building this alternative Western supply chain.
Why Australia specifically?
Well, several reasons. Unlike some places, Australia has proven reserves, yes, but also stable government, good infrastructure.
Right.
Victory Metals' North Stanmore project, for instance, already has sealed road access. Lynas has established permitted processing facilities. But most importantly, Australia has these heavy, rare earth deposits that China doesn't directly control. Victory's North Stanmore, with that 3.6% dysprosium terbium content, those are exactly the elements projected to have maybe 70% supply deficits by 2030.
70% deficit, wow.
So that geographic and geological diversification makes these Australian projects strategically vital, almost regardless of their production cost, compared to China's subsidized output.
And it's not just about digging stuff up. There's that technology transformation happening too.
Exactly. MTM's Flash Joule Heating is a prime example. Breakthrough processing tech that could recover REEs from waste streams. It complements traditional mining. It doesn't necessarily compete head-to-head, creates more paths to supply security.
And the government backing just keeps ramping up.
Unprecedented levels. Beyond the Pentagon's MP deal, that $430 million plus from the DoD since 2020, Victory getting interest from the EXM Bank. These strategic projects are getting financing terms you wouldn't see in normal commercial mining.
And this isn't just an Australian story, is it? The momentum feels global.
Oh, definitely. Look at MP Materials itself, up 93% quarterly. Energy fuels, another U.S. player, up 65%. The RMX ETF gaining 26%. It really shows institutions believe Western rare earth companies have entered a period of, well, strategic advantage that could last years.
So this isn't just another commodity cycle boom and bust.
I don't think so. The drivers are different this time. It's driven by a permanent geopolitical realignment, a structural shift.
The Pentagon buying a massive equity stake in MP Materials that tells you national security is trumping purely commercial logic now in these decisions.
That's a very strong signal, yes.
And there seem to be multiple potential catalysts coming up that could boost things further.
For sure. Lynas actually producing separated heavies in Malaysia proves the monopoly can be broken. Victory's metallurgy results show Australian clays can be economic. MTM commissioning their pilot plant later this year.
That could be huge if it proves the tech works at scale, recovering metals from waste that used to just get shipped overseas.
Right, so you have this combination. Strategic government support, real technological breakthroughs, and proven resources. It positions these companies right at the center of what looks like a multi-decade transformation of the supply chain, far beyond normal commodity cycles.
Okay, so let's try to summarize the key drivers here, really transforming the rare earth sector. First,
geopolitical supply chain restructuring has to be number one. China's actions triggered a permanent Western move to diversify. And it's backed by serious government money and partnerships now. That means faster development, less downside risk for these companies.
okay, the same driver.
Technology innovation acceleration. We talked about Metallium's Flash Joule Heating. These kinds of breakthroughs could allow rapid scaling of domestic processing, even from waste. That gives you exposure to mineral recovery without some of the traditional mining risks.
Makes sense. And third,
The heavy REE supply shortage. Simple supply and demand, but amplified. Projections of 70% deficits by 2030 for critical heavies like dysprosium, terbium. That creates huge potential pricing power for anyone who can successfully develop those resources.
like Victory Metals' North Stanmore project, offering direct exposure to those really constrained elements.
Exactly.
So what does this all mean for you, the listener?
I think the core message is that the rare earth sector, it's fundamentally changed. It's moved beyond just cyclical commodity ups and downs.
Yeah, it's become a strategic resource competition.
Right. With U.S. defense policy prioritizing supply independence and China's export restrictions creating potentially permanent shortages, this really looks like a multi-decade megatrend, driven by national security, not just economics.
It's really not just about commodity prices anymore. It's about global power who controls the building blocks of future technology.
That's a powerful way to frame it. And maybe a final thought to leave you with. Consider how these efforts securing independent rare earth supply chains. It's not just about factories or mines.
No.
It's arguably about actively rebuilding the technological foundations of Western military capability, Western economic competitiveness. It signals a really profound, potentially lasting geopolitical realignment.